Market makes a recovery from the day's lowest level. The Nifty, after hitting the low of 22,004, ends near the 22,100 levels. Bank Nifty, of course, ends in the red. Financials were among the top laggards.
Lupin Global CFO believes it doesn't make long-term sense to make drugs in the US. He adds the cost of manufacturing in the United States could be 8 times more than India. He adds that drug shortage in America has hit a high, with 70% generics being imported by the country. Any tariff imposed will be passed on to the consumer.
Veteran investor Motilal Oswal's Ramdev Agarwal says the market is close to a bottom with valuations near the 10-year average and key indicators are starting to turn positive. He adds that the earnings picture remains intact, although the momentum there has slowed down a bit. Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we aim to get you everything you need to know as we gear up for the next trading day. I'm Prashant, with me, my colleague Reema. Reema, hi.
Hi, flat close in the markets, but we managed to hold on to 22,100. And Prashant, quite a remarkable recovery on the mid-cap index. It was more than 2,000 points off lows.
Absolutely, and quite a bit of recovery coming in through the course of the day. And I just want to say one thing about today, the advanced decline, if you can pull that up. I mean, actually, there's only one thing to describe the session today. If you looked at the broader markets, and if you look at advanced decline, you'll feel that, well, it was all down and out. 2,000 down and about 708, about 800 stocks are higher. But there was very little volume on stocks which were selling off today. And I think that is an important point, which we've not seen over the last many days. I mean, can we say we've seen a bit of selling exhaustion here? Probably. We'll have to wait and watch how the markets pan out from here on. But after many days, volumes were all on stocks which were higher. And there were, about 15, 20 of these names, well-traded, well-owned names, which had volumes and which were seeing some recovery and bounces as well. And Hormuz will take us through that. On the downside, not very much at all. Reema.
Okay, let's tell our viewers what we've lined up for you on our show today. The top movers and shakers with Hormuz stocks on our radar include Coal India, Ultratech, PFC, REC. We'll bring you the news on that and we'll delve into the key market events to watch tomorrow. But first up, it's over to Hormuz now. He's at the big wall with the top stock movers of the day.
A choppy trading session, but you would take that close with both hands, especially considering how the last week had panned out. But there were enough and more stocks that kept the Nifty gains in check, and Reliance Industries was prominent among them. The index heavyweights along with HDFC Bank also contributing to keep ensuring that the Nifty does not move higher. Bajaj Auto, Coal India, Maruti, also some of the other underperformers in today's trading session. Some of the capital market names, they had a mixed session today, but most of them on the downside. Angel One ending 9% lower in today's trading session. Broke BSE after the price target cut from Goldman Sachs. MCX also moving in a similar vein, and a not very good day as well for 361 WAM and for Motilal Oswal as well. There was some recovery in the broader markets, but there was very little recovery seen in the PSU banks. And most of these names that you see on your screen are those low float PSU banks for whom the QIP talks are currently under consideration, and Bank of Maharashtra too ending near the lows of the day. The early onset of summer has ensured that most of these names, the durable good stocks, did very well in today's trading session, be it Voltas, Blue Star, Symphony, and of course when it's hot you need drinks, and Varun Beverages too had a good day in the office in today's trading session. And lastly, some of the other outperformers in today's session, Narayana Health, regardless of the market, it's continuing to move from one high to another, 12% higher today as well. Wellspun Living, Tube Investments, Supreme Industries too were some of the other names that had a good day today.
All right, Hormuz, thank you very much for that. Sudip Bandyopadhyay is with us. Sudip, of course, is with Inditrade Capital. Thakkar of ICICI Securities is also with us. Gentlemen, thanks very much. Jay, if I can get a quick view on markets, on Nifty, Bank Nifty first.
Sure. Very good afternoon to you, Prashant and Reema. I would say, Prashant, markets had again fallen today after a sharp cut in the last trading session, more than 400 points down. Today, Nifty was down one point of time, more than 100 points. But if you see, the IVs have cooled off. At the end of the day, we saw broader markets recovering quite sharply. And what also interestingly, Prashant, we have witnessed is that Nifty has created a good put base right from 21,800 until 22,000. So if you see the put additions in today's trading session, that clearly indicates that yes, the June 4 lows of on a closing basis of 21,800 might just act as a very crucial support on an immediate basis. And apart from a couple of stocks like HDFC Bank and Reliance, otherwise the market was okay and it was trying to bounce back most of the stocks. Prashant, I would say only two stocks from the Nifty 50, like Reliance and SBI Life, wherein you have got good amount of shorts, at the lifetime high. Despite almost 30% of the shorts getting covered, the prices have not reacted. We haven't seen a price bounce back as compared to the short covering that has happened. In fact, Reliance has broken its previous lows. However, HDFC Bank is still above its Jan low. So net, the probability of markets, making a good bottom around the levels of 21,800, the probability of the same is quite high. So the risk reward is absolutely positive right now. So, those who can take a contra bet, at least targeting around 22,600 to 800 in a mass series, I think the risk reward is quite favorable on the long side. And we have seen Bank Nifty and Film Nifty already outperforming the other sectors. I mean, Fin Nifty has been holding well, 22,700 to 800 levels on the downside, and Bank Nifty is struggling, but then it's trying to manage around 47,500 to 48,000. So net, the outlook is that there can be some bounce back from the current levels.
The Nifty Bank managed to hold on to 48,000 today, even as it ended with a cut of close to about 0.5%. And HDFC Bank is now up 18% in the last 1 year. Now let's go across to Nigel for some stock-specific action. Coal India was the top Nifty loser, down 2.5%. But on the flip side, Ultratech Cement, after Friday's cut, came in for buying. Nigel?
Well, that's right. Ultratech had a con call on Friday, and the clarity that they gave on their con call was good both for the company as well as for the other cables and wires players. Let's run you through the details. They said they look at an IRR of around 25%, ROC of around 20%. In terms of a sales mix, 60% of their mix will be towards wires. The asset turn will be around 5 times, and they're looking at commissioning by December 2026. The reason the street appreciated their call is, one, they clarified this is a one-off strategic diversification, and they're not going to be looking at any other diversification. So they're going to be, their core focus is going to be on cement. The street like that. The basic reason that they're looking at cables and wires is they're looking at higher customer wallet share. And also, why was it good for the other cables and wires players? Because they said they're not going to be disrupting pricing. They don't believe there's a case out there. And there's enough of room to accommodate another player. So that's why we did see cables and wires players as well did rejoice. What did the brokerages make of this move? Both DAM Capital as well as Jefferies, both of them are positive on the stock. DAM Capital says that the recent stock price correction, well, it is an overreaction. They also went on to state that the investment is nominal and it has potential advantages in place. And also they highlighted that the ROC of cables and wires is more than 20%. On the cement business, it's only around 12%. Jefferies, they got comfort from what the management had to say with regard to the future capital allocation, that they have. Moving to Coal India, the street was disappointed with its numbers, and also the last few trading sessions, Coal India has seen a bit of an uptake. Why were they disappointed? Because the production was down by 1%. You had the dispatches that were down by close to around 5%. And year to date, it's a measly 1.5% growth that you're seeing on production as well as offtake. Morgan Stanley, though they're overweight on the stance, on the stock, they say that Q4 FY25 as well as FY26, there is a risk to the numbers because of this weak showing that we have seen in February as well as the prior few months. But I'll tell you what, valuation-wise, it will be difficult for the stock to go much below these levels because of the dividend yield as well as the valuation comfort. Back to you guys.
Well, that whole story about dividend yield, right? I mean, absolutely, for many, that was the absolute sort of screaming reason to own names like Coal India. I mean, you get paid for waiting while, the business sort of works itself out. Nigel, thank you very much for that. Sudip, actually, today, if you look at sectors which did well, right? Defense was up, actually PSUs were up, metals were higher, real estate came back up a little bit, the IT index was up 1%. So if one has to start getting a little constructive here, Sudip, across a wide range of sectors that you cover or a group of stocks that you cover, what has come back and come into viable kind of zones?
I think as far as defense is concerned, I've been positive, Prashant, on Bharat Electronics, and I think that stock has started doing well. I strongly believe that that's a fantastic stock to own, and there's all the correction which had happened in the sector was a great opportunity to buy and I start accumulating that stock. I'm talking about Bharat Electronics. So BEL is what I believe. As far as the metal names are concerned, a bit of an opportunistic, but a buy in Vedanta has been on our recommendation list for some time. The value unlocking possibility through the dream merger, which is happening, I think is going to manifest itself soon. Also, all these tariff and this entire confusion around the global economic scenario is leading China to do a lot more as far as incentives are concerned to the domestic industry. This, at some point of time, will trigger an incremental demand for metal, and that will be positive for, amongst others, Vedanta also. So Vedanta is a buy for us. BEL is a buy for us. And, the overall, I think I mentioned about Ultratech, and we do like Ultratech quite a bit. And with cables and wires entry, I think it becomes even more attractive from a long-term perspective.
Got that. Let's talk about PFC, REC, both surging in trade. This is after CLSA upgraded their rating. Hormus is back with us for more.
High conviction outperform in that list now is REC and PFC for CLSA, but interestingly, they've cut their price targets to 525 each for both these names. Let's start off with PFC first. They say that the existing pipeline is going to support the double-digit growth. The ghost of the bad loans is now behind them. The outlook on future disbursals is good. Valuations are attractive. The best in delivery on loan growth. The dividend yield is attractive, and hence they've added PFC to that high conviction outperform list. For REC as well, they're saying that the undisbursed sanctions of around 55% is already signaling a double-digit growth for the stock. It has not seen any slippage over the last 3 years. The outlook on disbursals is good, and it also has a best-in-class delivery and a strong management track record. So high conviction outperform on CLSA on both of these names. Both did well today. All 12 analysts tracking the stock have a buy rating on them and an upside of around 45%. Even after the price target cut in a market like this, you take that with both hands.
All right, Hormus, thank you very much for that. Absolutely. I mean, stocks have corrected quite a bit in that space. Let's move on to the auto space. February auto sales numbers came out earlier, and data indicates that sales were largely below expectations. Even domestic sales were a bit of a drag. Sudarshan is here with the key highlights from the data. So over to you.
So overall sales for the month of February for auto companies were largely below estimates, and tracking that Nifty auto index, after all the volatility we have seen intraday, it is closed with minor gains. And stocks that have hit 52-week lows were Tata Motors, Bajaj Auto and Hero MotoCorp, and stocks that have outperformed are M&M, TVS and Eicher Motors, and also Escorts Kubota. So what are important takeaways from February auto sales? First, overall sales was largely below estimates. Second, entry-level segment remains a drag in four-wheeler space. You can see from Maruti's numbers, and two-wheeler space you can see from Hero MotoCorp numbers. Third is domestic sales remain a drag. For majority of the companies, domestic sales have seen either a minor jump or have seen a fall. And last is exports on a selective basis have seen a jump. For example, for TVS Motor, exports have seen a jump of 26%, while for Bajaj Auto, exports have seen a minor increase of 1%. Now, talking about the segments which have outperformed, first is tractor segment. It was healthy for both Escorts Kubota, which has seen a growth of 11%, and M&M, which has seen a growth of 18%. Also, it can be seen from the recent GDP data, in which agriculture growth has come in at 5.6%, and it has outperformed all the other segments. Second, SUV, in which M&M continues to lead, and for this, SUV growth was at 19% in the month of February for M&M. Also, Maruti has seen healthy growth for utility vehicle or say SUV. And third is the high-end motorcycles. Eicher Motors, for up to 350cc, the growth was 17%. But if you look at the growth of segment that is above 350cc, growth has come in at 33%. So high-end motorcycles have outperformed the lower-end motorcycles. And segments that have underperformed, first, entry-level car. Second is entry-level motorcycle, both in two-wheeler space, Hero MotoCorp, and in four-wheeler space, Maruti's numbers you can see. And last is domestic sales. And tracking all these, M&M, Eicher, and TVS have seen healthy gains today, and Maruti, Tata Motors, Bajaj Auto, and Hero Moto were a drag in today's trade.
Thank you very much for that. We'll also thank Sudip Bandyopadhyay for joining us on the show. Now let's get veteran investor Motilal Oswal's Ramdev Agarwal's view on the market And he believes the market is close to bottoming out with the valuations near the 10-year average. Even on the earnings front, he said, yes, the earnings profile has slowed down, but it's not broken. Listen in.
Earnings profile is slowed down, but it is not broken. I mean, last year, the current year, the earnings are going to grow at about 5-6%. And there is obvious reason for credit slowdown, economic slowdown. Every aspect of tightening by the regulators have happened. And now, and there was the election, so there's a delay in the government expenditure and all. So all of this have passed. I mean, this is the year of actually all kinds of difficulties, I would say, in economy. So I think we have set the mood. One, correction is done. The P multiple, which was at 23, 24, that has come down to less than 20. And it is below 10 years average. So I think it is painful, I understand. It is painful to me also. But it is very, very logical. I mean, it's a proper, healthy correction. I think the divergence between mid and small is too high. Let's see how the market does. Maybe mid will keep correcting and large will make a move. Or large will make a move, but mid will stay there. And then it will catch up. So market does its own stuff. I think most important thing is now, don't wait for because we are closer to the bottom. Now, whether it is 1,000 points away, 500 points, I have no idea. And let me tell you, nobody has any idea. Now, this is a time stocks are making bottoms. All the stocks will not make bottoms on the same day. Okay. So if you like certain stock, and that stock is available at your dreamy price, and it has gone below that, don't hesitate, start moving into the market.
I think that's important points that Ramdev makes there. Don't wait for the entire market to bottom together. It doesn't happen like that in any case. Well, we also had Navneet Munot join us earlier today. And he essentially, he's of course MD at HDFC AMC, believes that the structural story has not changed despite corrections in the market. Listen in.
I think markets have done very well. Of course, a year back, everybody was saying, all of us, Ramdevji, we were discussing that looking at the valuations, a correction is imminent. And we have seen that in last 4 or 5 months. Variety of reasons have led to that. But I think as valuations correct, the structural story hasn't really changed.
Okay, and Lupin's global CFO believes it does not make long-term sense for the company to manufacture drugs in America. He also added that Indian companies have diversified and they're not dependent on the US market alone for exports.
The cost of manufacturing in America is not going to be cheap. I know as a matter of experience that what costs about $6, $5 per 1,000 tablets could potentially cost about $35 to $40 out there, 8x in terms of manufacturing cost, conversion cost. And that's something which has to be, it's not easy for them to kind of digest something like that. This industry, it caters to the rest of the world as well. And America is not necessarily the El Dorado that it was some time ago. So a lot of companies are kind of diversified also. So from a sector perspective, whilst it is, of course, disturbing news, it's something that we need to contend with. These temporary blips will certainly continue, but I see a long-term future which is pretty, pretty rosy and pretty interesting, alluring from a pharma perspective. It's not as though we are dependent only on America. So essentially, from our perspective and from the industry perspective, India is still a wonderful market, and there are exports to other parts of the globe as well. Though, of course, America remains the most important market, and any tariff change will certainly in some ways impact it.
All right. Well, that's important, interesting views. Ramdev Agarwal, Navneet Munot, and of course, Lupin's Ramesh Swaminathan. Before we wrap, we bring you some key market events to watch out for as we come back tomorrow. Mangalam is standing by with that. Mangalam.
Well, it's not the number of events that are there tomorrow. That number is very thin, but the impact of that could be far-reaching, and that's where it is extremely crucial to track. The first one, tomorrow is March 4th, which implies that it is also the day when, tariffs come into effect. 25% on Mexico, 25% on Canada, 10% on China itself. So those are the most important, things to track in tomorrow's trading session. From a stock market standpoint, look at Coforge. We've seen some traction in mid-cap IT lately. Coforge board will consider a stock split. So does that, increase the liquidity in the stock or not is something that we'll be watching out for. And from a macro standpoint, the Japanese data is likely to be out tomorrow, consumer confidence data and unemployment data. What does that do to the Bank of Japan's policy is something we'll be tracking. And, across the Atlantic, we will have the European data that will come by as well. In the evening, you'll get the European unemployment data. So to that extent, those will be extremely crucial to watch too. The most important, however, will be the impact of Trump's tariffs, which come into effect.
Indeed. Thank you very much for that. And that brings us to a close in this edition of Markets Forward. We'll be back with more news and updates. Stay tuned.
Well, we'll take a quick commercial break here. We're going to come back and get you lots of opinion. So we had a host of experts in the morning, Ramdev Agarwal on markets, Navneet Munot of HDFC AMC on